Hey there. My name is Mark Bolger. For those of you that don't know me, this is what I look like right here. And I am the president and founder of Bollinger CPA and Consulting. We are a boutique CPA firm specializing in accounting for small businesses, doing accounting, payroll, and taxes for those businesses and the people that own them. In addition, we also help troubled taxpayers across the United States resolve some tax matters with the IRS and the state. Today, we're going to be discussing smart savings with an S corporation. So, that's all the rage. Everyone's always talking about, how can I save money? There's a lot of misinformation out there. But what I wanted to talk about today was, kind of what is the overview. So what's S Corp 101 per se, right? So what does it mean to be an S corporation? So first and foremost, profits and losses are passed through to the shareholders. That's super awesome, right? Corporations of the normal kind, what they call a C corporation, they pay taxes at the corporate level, and then when you want to take money out of the business, you pay it in addition at the personal level. You pay taxes on your dividends. In the case of an S corporation, you pay taxes only individually. There are no corporate tax rates typically for that. Now, there can be other kinds of taxes, maybe a franchise tax or something like this, but there are no corporate taxes. What this makes it is often, a smart tax structure for you. You only pay tax once. The tax is not paid twice. So you're not paying taxes on the profit that you make and then paying taxes when the shareholders take the money out. And then, so the question really is how do you save money? When you have an S corporation. Well, again, I'm sure you can understand. So when you are a corporation, and people that work for corporations, they get paychecks. So when you own an S corporation, you have two jobs. One of those is as an employee of the corporation, and one of them is as the owner of the corporation. So for your work as a person that works there, you need to take yourself a reasonable salary. And then for your role as owner, you get to take the profit as dividends, also known as distributions. How do you save money? What does that mean? Because those dollars, those distribution dollars, they're taxed differently in an S corporation. There is no self-employment tax. So if you were a sole proprietorship and just a guy or gal doing business, then in those scenarios, you have to pay self-employment tax on your profit. Okay, so in this world, on this profit, there is no self-employment tax. In addition, there's a lot of good tax deductions that you can get through an S corporation, specifically in the areas of healthcare and this type of thing for you and for your staff. Okay, so what are some of the best practices? Well, actually, what's the tricky part on this? Well, the tricky part really is you need to make sure that you take reasonable salary. But, the thing is that the IRS, it tells you need to do that, but it does not define what reasonable salary is for you. So in doing that, it's very possible, and there's a tendency actually for people to set their salaries too low. And when you do that, the IRS is going to come knocking because, as you can imagine, there's a perverse incentive for you to pay yourself less. Right, because that means there's more money available to take as profit, and that profit doesn't get subjected to the self-employment tax or FICA and Medicare, which is what the equivalent. So there's an incentive for you to take a low salary, but if you do that, the IRS can come knocking. So you need to set yourself up a reasonable salary in order to do that. So what are the best practices? Number one, in this world, you need to have good accounting records. So they need to be good. They need to be clean. I would suggest they need to be audit proof. What's really important, we discussed a minute ago, is you need to determine what reasonable salary is on an annual basis. And you need to have a defensible way that you do that. You can't just make it up. So there has to be a real good way to do that. And a small business accounting specialist can help you determine what reasonable salary is. So I suggest one of the best practices is here for you is for you to determine what reasonable salary is on an annual basis. Okay, so if you or anyone you know needs anything related to S Corporation information, you're looking to start a small business, you don't have a CPA yet, or you're not happy with the current one that you have, you can feel free to reach out to my firm at 405-384-4900. However, outside of that, wish you good luck, and as always, talk to you soon.